What's up everybody, Michael and Coco here to do some technical analysis on the SP 500. We have been reunited. I'm back from the trip. She's super excited. Look at that face. Let's get into it. All right, welcome back. We are here on the daily time frame. Today we're going to be looking at the daily time frame and the 30-minute time frame, mapping out support and resistance, kind of talking about what's going on with the chart. As you can see, I have two rectangles up here. The top one is a red rectangle. That is the area of resistance known as the bear's camp. That's what we've been calling it. This green one down here is the bull's camp, an area of support. Now, if you have watched previous videos, I've been drawing out this rising wedge pattern that looked like so, just like that, and we had this break below it, but yet it didn't really quite pull back all the way that I thought it would. It looked like 3,200 did hold, at least for right now. Now we are going through earnings week, so it's going to be volatile. It's going to be some choppy waters taking place. So this could be somewhat normal where we might see, a move up and then maybe a crack below 3,200. And then my price target was around 3,150 on that break, which is about the size of the base here on the rising wedge pattern. But because of today's performance and we close back into the bear's camp, I'm going to go ahead and just remove the rising wedge as of now, and I'm going to be focusing on this longer term trend line that it looked like it touched down just these past couple of days. So if I go like this, you're looking at a longer term from the March low, then you have this pullback over here June 29th, and then you also had it right here July 24th, and then we flirted with it again today. So is this trend line going to hold up? Are we going to see a continuation? Are we going to see a bust above this 3282 to close that window? I know that if we get up here, there's no reason why we wouldn't touch the market high at 3,400. Obviously, the market has a lot of work to do, but this market has been fueled by liquidity from the Federal Reserve. So really, if the Federal Reserve is going to keep continuing to supply liquidity into the markets, there's no reason why this market can't keep going up. And that is why we've been saying it's more of the buy the dip, sell the rip type of market. Dating back to about May 26th, you can see that this price has been, the chart has been kind of trading in within this channel right here, which we called out on previous videos back then. One of the things that we said is when it gets into this area, it's going to be probably more volatile. And that's because if you look back at the history of the chart, and you could just see these very, very dramatic moving type of days that created a lot of volatility. So we are back in that channel as of right now. The price is at 32.45, looking like it wants to kind of go higher. Once again, keep in mind, tomorrow's Tuesday. It could be turnaround Tuesday. We might see another pullback. It seems like everything in the markets was up today. We had the 10-year bond up. We had the gold up, silver up, miners up. We had the SP 500 up. It just seemed like everything across the board was on its way higher today. So it's going to be an interesting week to see how this all plays out. All right, so let's go ahead and hop into the 30-minute time frame to map out some support and resistances and kind of follow up on Friday's video. All right, so we're here at the 30-minute time frame. This blue vertical line right here represents where the day started. So basically from this point moving forward, each one of these candles represent 30 minutes of data. Now on Friday's video, we mapped out a couple areas of support and resistance. The area of support we were talking about was 3,200 for the S&P 500. And then we had an area of resistance right here at 3,227. We technically said it was kind of a range. Like we said, it was up here because there's 2 data points. And then it was, we had this low right down here of this candle. So it could have been kind of just this multiple areas. Now the reason why we picked this specific area, 3227, was because pulled down, bounced a few times right on here, and then it acted as resistance there. So those were the areas. Now we're going to have to make some updates. But before we do that, let's go ahead and just walk in through how these acted as support and resistance today on Monday. As you can see today, the price gapped up, pulled back a little bit, but ultimately came through very significantly hard, thrusting kind of through this 32.27 area of resistance. And once resistance is broken, then it becomes a support. So I'm going to go ahead and turn that to make it green. Now, the next area of resistance that we mapped out, which we've been mapping out, was this bear's camp. And the bear's camp was here at 32.25. That was the entrance into it. And as you can see, the price did get rejected for pretty much 30 minutes to basically an hour and a half right here. So it's a pesky little area of resistance. Then the price came down, pulled back all the way here, resulting in a reversal candle. And now what's pretty cool about this is look where it pulled back to. It pulled back to where our area of resistance once was, and once resistance is broken, it then becomes support. So it did form some sort of support right here. Now we said it was kind of a zone. So if I were to move this price down just a little bit right here, then you can see that pretty much it came down and bounced and acted as a support within this range. Not exactly spot on, but that's not a big deal. So it did act as a support here, formed a hammer candle, bounced up through there, and then we got acted as resistance again at this pesky 32.35 level. But at the end of the day, these last 30 minutes, the price bursted through it back into the bears camp. So the bulls are now back in the bears camp. So what do we need to do in order to update this chart? Well, there's a couple things that I want to look at here. First, I'm going to go ahead and throw up the 50 period and the 200 period moving average. This 200 period moving average is still sloping up, and that will act as an area of support. So 3,200 is still a good level, but just to for just organization purposes, let's go ahead and remove that right now, and then let's look for an area of support. So once resistance is broken, it then becomes support. So this bears camp level right here at 32.35, we can count that as a pesky little area of support. I'm going to keep the one right below it still active because I still feel like that could come into play tomorrow. Now, if the price breaks down through that, I don't see why it wouldn't come back down to this 200 period moving average and possibly even 3,200. Now it is earnings seasons once again, so we're going to see some volatility, some pretty decent sized price swings, some up and down, chop, whipsawing, you name it, it could happen. So where is areas of resistance? Well, first off, the 50 period moving average is an area of resistance to keep an eye on. As you can see, it pretty much tapped on it on the last 30 minutes here and then kind of just moved itself down into an indecision candle. So look for a break above that area for a potential move to the upside. After that point, just by looking at the history of the chart, I would say right around here at 32.54 or 32.55, let's call it, would be an area of resistance. So I'm going to go ahead and make that red to be an area of resistance. There's a lot of things going on here on this chart. We have a couple levels of support, one area of resistance. And there's one thing that I kind of want to just point out here that I think might be relevant and why I potentially see a burst above this and even higher. And that is there is somewhat of an inverse head and shoulders taking place right here. And now it's really sloppy, but it's still something to kind of take note of. You have a head here, you have a shoulder here, and then you have a shoulder that kind of formed right here. And then you have a pretty significant neckline at this just above 32.35. I would say it's right where this 50 period moving average is, which is 32.41 or whatever. So right here, 32.40, 32.41. If we do see a continuation move to the upside and we don't get some sort of turnaround Tuesday, I think that potentially a break above this 50 period moving average, if that holds true on this inverse head and shoulders, I don't see why we wouldn't retest this area, maybe get hung up a little bit, but ultimately move to a higher, to the high of last week, which was, I would say 32.70 up to 32.80. So we will see how that plays out. And as I said previously, this is a buy the dip, sell the rip type of market. It's important that we map out these areas of support and resistance because as you can see, the price does get hung up in these specific areas. So you need to be patient for when you enter into a position, and when you exit positions, you have to be patient as well. So if these areas are holding true, and maybe we might see a bounce from this point all the way up, right? So if we do see the price come down, this could be potentially a good buy the dip and then potentially sell the rip. Now it might obviously get pulled back and then get hung up, and it could go every which way possible that you can potentially think of, but it's important to map out these levels to be prepared to set up good risk versus reward trades. So heading into tomorrow, these are going to be the key levels to keep an eye on. We have 32.35, 32.26 as areas of support. Anything below that, I would say it's going to be 3,200 to this 200 period moving average. And then as far as resistance goes, you want to keep an eye on this 50 period moving average, and then also the resistance right above there, which is 32.55. All right, that is all I have for you on today's S&P 500 technical analysis update. See you on the next one.